I'm Bill McWilliam, President of Cascade Aero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascade Aero's patent-pending leach process has the potential to make Cascade Aero the lowest cost supplier of cesium in the world. Visit our website, cascadeaero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Bursts, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
How are you doing? Good to see you.
We're doing great in Vancouver. Hilliard, the Bank of Canada just did its financial review. It said the financial system is resilient, but it's still very concerned about household debt and the housing bubbles in several cities.
Yes, they alternate between vulnerability is the word and resilience. So they talk about how the vulnerabilities are still very much there, but the recent changes that have been made will, in the long run, improve the resilience of the system. So this is a financial system review, and they're responsible for monitoring the quality or the resilience of the overall system. And of course, all the individual participants are doing their own thing, trying to maximize their profits. And the invisible hand of Adam Smith talks about means everybody can do their own thing, and somehow overall it works out. But in the case of housing and debt, and elevated household debt, the only supervisor, I guess, would be, on the overall basis, would be the Bank of Canada. And they really do alternate between talking about the vulnerabilities and talking about the resilience. But there's some amazing numbers in there. Like, for instance, they mentioned in Toronto and Vancouver, 90% of the buyers are on what's called low-ratio mortgages, which means they have to have at least a 20% down payment. Now, that could be viewed as a good thing to say, well, these are really wealthy people that have 20% down to buy a $1 million home or $2 million home in Vancouver. On the other hand, you could say, well, they're circumventing the rules. They don't qualify for the CMHC rules, and therefore they're going through the loophole, which is if you have a 20% down payment, you don't have to qualify. And that loophole is being closed as of January the 1st, like something like 33 days from now. So it's actually quite frightening if you look at it from that point of view, that 90% of the homes are being bought with the exemption allowing them to get in there without having to jump through all the hoops and meet all the required standards. And who knows what happens on January the 1st when even the people that have a minimum 20% down payment will still have to qualify, similar to the way that the current high ratio mortgage people have to qualify. So, it could be looked at either way. I'm tending to think that there's a shortage of people. Based on my work, I'm pretty convinced that there's actually a shortage of people that actually can really afford these $1 and $2 and $3 million homes. So we're going to find out if that's the case pretty soon.
The bank is still worried about household debt as well. Every Christmas, we always hear people say, "Oh, I had a budget of $500, but it came out to $850." Is it time for people to really think this is your budget, and will it be paid off by the time we go to Christmas next year?
Well, you wonder if people think about that. I don't think they do. And like one of the things in the Bank of Canada review that came out today, they mentioned that a typical family in the high indebted group has a $360,000 loan and a gross income of $63,000. So that's before all the income tax payments and everything. And that's almost a 6-to-1 ratio. And I just the mind boggles as to how we got to this situation where really people with pretty modest income, a family income of $63,000 is not a 1%er by any means. How were they ever allowed to borrow $360,000? And So these are the people that the Bank of Canada is worried about, and I think this is the big issue. And they debate over whether it's 10% or 20% of the people out there. I think what they're saying is in Vancouver and Toronto, it's maybe more than 10 or 20%. It might be a larger number. So when I don't know how we get from the situation where people are not really thinking about how much debt they have and how scary that is and how risky that is, to a situation where people are more worried about debt. Like the whole system has done an amazing job the last 30 years or so, as I've watched this, to convince people that taking on debt is an okay thing. It's almost like it's a sexy thing. Like, you're richer than you think is the slogan, and people rush out to buy more stuff and do more things and go on more trips. But the other side of the coin, of course, is the debt endures for a long time. And one of the things I think they should do is when everybody makes a purchase, whether it be a house or a car or whatever, they should have to, the lender should have to make it clear to them how much the original purchase is and how much the interest is going to be paid. For instance, at the current rates of roughly 4.5%, let's say, on a mortgage, over 30 years you pay double the purchase price in the interest when you add the interest back in. So if you could buy a $500,000 house, you actually end up paying $1 million with interest. And at 6.5%, and those rates aren't that far away. If rates rise, rates have been rising for a while now. You pay double in 25 years. So the typical mortgage amortization period. So nowhere is that revealed. In fact, if you go on the mortgage calculators of the major lenders, you can't even get that information out of there. You can't ask it to tell you how much total interest I'm going to pay over the full 25 years. But there are some other calculators that you can go to that will tell you that number. So, things like that. And I
well, that's why a bank is so eager to get your mortgage.
Well, I mean, it's great for the bank because they're going to make a lot of money off of all this interest that people are paying, and they're the most profitable organizations in Canada. In fact, recently, of all of the companies listed on the Toronto Stock Exchange, 50% of all the profits earned by those companies just went to the top lenders, the Canadian banks. So Canadians don't seem to be upset about that, but because they don't connect the interest they're paying on their mortgage and their car loan and all that with the profits that are being earned by the lenders. But it is a very odd situation, and nothing like this has ever happened before in Canada, and probably very seldom has it ever happened anywhere else in the world. So I guess that's why they don't want us to know. But that would be, if we went from a system where we're just relying on the invisible hand that Adam Smith talked about to a system where people need a little protection because they're people who don't have the information, and lenders would be required to reveal this information to people. Maybe it wouldn't make any difference. Maybe people would just say, "I want it. I can afford it. I can afford the monthly payment. I'm going to go for it." I don't know. We should try it. I think we should at least try.
We'll have more with Hilliard MacBeth right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Home Capital is facing a major lawsuit. Could you explain what's happening there?
So one of the short sellers, so I think most people know the story about Home Capital in a broad sense. It's an alternative lender. Their business plan was, if the bank turns you down, come to us and we'll make a loan. they have a challenge as an alternative lender in that they have to keep finding new borrowers all the time. They charge a much higher interest rate than the bank would, but their loans are only for 1 year. So they've got a whole network of mortgage brokers out there that feed them new business all the time, which they need because their loans are maturing every year. And what happened was they found that some of the mortgage brokers had been inflating the income or in some way fraudulently filling out application forms for these loans. Whistleblower actually tipped off the regulator. The regulator contacted Home Capital, said, we found out that you've got this problem with fraud. And then Home Capital, which is a publicly traded company trading on the stock market, at the time was trading around $50. They sat on this information. So they launched an internal investigation. They knew about it, say, in September of the previous year, and they didn't reveal it until June of the following year. So they basically sat on it for 9 months, and the Ontario Securities Commission investigation charged the CEO, the CFO, and maybe one other person with contravening the rules, and they had to pay a big fine, and they were removed, and they're not allowed to be. The CEO's like 78 years old, so he probably doesn't care. He made a lot of money over the years, but in any case, all of this happened. They agreed. They accepted the charges. They admitted guilt, but in the meantime, during that 9 months, there was a lot of negative information that could have been revealed about the company, or at least about the mortgage brokers that were feeding the company business. And it wasn't disclosed, which is the law. You have to disclose it. So these guys are suing for $74 million. And this is a bit of a twist. They had sold the stock short, and that maybe 50, let's say, I don't know exactly, it'll come out. If the lawsuit goes ahead, all of this is going to come out. It's going to be fascinating to watch. They maybe sold short at 54, and the stock stayed up at that level, even though the company knew that there was this major problem. So their argument, I'm guessing, is going to be if they had revealed the information like they should have, the stock would have dropped from 54 maybe down to 15 or 20, and we would have made a bunch of money on our short sales. So therefore, you owe us this profit, which they calculate to be $74 million. The company has responded and said they have a defense. They're not saying there's no truth to the allegations, but they say they have a defense. And they're going to, as part of their defense, they're going to investigate the short sellers acting individually or in concert with each other. So this could be the most entertaining lawsuit in a long time in Canada if they try to link the short sellers to each other. Now, this particular short seller that's launching a lawsuit, I didn't recognize the name of it. It's not a short seller that I'm familiar with. I have met and talked to some of the other short sellers because of my book, but I don't know these guys. But it'll be really interesting if they actually go ahead with the lawsuit. I'd be surprised though if Home Capital actually goes through with the defense. I suspect they'll have to settle. The company, in the meantime, of course, because these other people were ousted, it's got all new management, and they took over a few months ago. And of course, this all happened before they took over. So the problem the company has, of course, is though that house prices have started to fall in Toronto, and they're a highly levered company in a highly levered housing market, and they don't need a $74 million or even a $24 million loss. It's not something that they would be able to handle very easily.
Well, Warren Buffett is now a major investor in Home Capital as well, right?
So what he did was he provided a loan to them of about $2 billion, and he got collateral. He got collateral for that loan of at least $4 billion of mortgages, and then he also invested a couple $100 million in shares in the company. The shares, which had been $5 at the time that he invested, jumped all the way up to $17 because of the Warren Buffett name and the fact that he was putting money in. He basically saved them. And this happened in about May or June of this year. And the stock has been pretty strong ever since until this lawsuit came out. So, but Warren Buffett isn't committed to anything. He's not on the board of directors. He's basically, if company were to go completely bankrupt and disappear altogether, he would be fine because he'd be able to seize the collateral of $4 billion of mortgages, and he would be able to recover even if as long as they sold at 50 cents on the dollar or higher, which presumably they would sell more like 75 or 80 cents on the dollar. He would recover all of his money and then some. So he doesn't really care if they survive or if they disappear. But it definitely had the effect of giving the company at least a temporary boost in their share price. But the fundamental business model just doesn't make any sense. You know, it's not like the senior lenders, the banks and the credit unions and all these other people are really leaving a lot of business walking away from a lot of business. Other alternative lenders like Home Capital, and there's a couple others like Equitable and First National Financial, and that they really are picking over some scraps, and it's a tough business. All they need is for a few of the. So they need to raise money that they then can lend to the people that want to buy houses. All they need is for a few of those investors to get cold feet, and they'd be out of business pretty quickly.
Hilliard, you're also telling me that a major developer in Edmonton has gone bankrupt?
There's a very shocking bankruptcy a couple of weeks ago in Edmonton called a company called Rebuilt Homes, and there's a couple of what shocked me was the size. So the total debts owed were $243 million. Now that may include a bit of extra fluff in there because of the nature of the house building industry. There's land involved and then contractors and everything. And the Royal Bank of Canada was the lender that put them into receivership, and they were owed $66 million. But then when they go into receivership, the receiver publishes on the website all of the secured creditors and the unsecured creditors, and that's where the surprises came in. So I was surprised that the Royal Bank was in for that much, because this is a company that has been building, say, 400 to 500 homes a year, which is, say, $200 million a year in business in a good year, and profits might be, $20 million, $10 million, somewhere in there. So for them to get into a company for $64 million of that nature is pretty surprising. But then when you add in all the other debts that they owe, it's pretty amazing. And this is during a time when the housing business was pretty good in Edmonton. It wasn't great because of the drop in the oil prices and everything, but it wasn't like a major collapse either. So I think it's a sign that things are changing in the housing business, and it might not just be Edmonton. It could be Calgary as well. And they did operate in Calgary, so it'd be fascinating to watch. Some of the creditors are land developers that provided them with lots to build houses on. In fact, some fairly major land developers are owed quite a bit of money. So it'll be interesting to watch that. And here we've got two. We got Home Capital in Toronto, and we got a large home builder in Edmonton. And a few months before, we had a large land developer called Walton Group in Alberta go bankrupt as well. So, the Bank of Canada, we started out talking about a few minutes ago, says this, they're worried about the vulnerabilities, but they're hoping the system is resilient. But this is what happens when people have, when there's a large number of people that are heavily indebted. It just takes a couple of little surprises like these bankruptcies to kind of tilt people into a more cautious attitude, especially among the lenders. And once the lenders turn cautious, then you get it's actually got a term from an American economist named Hyman Minsky. It's called the Minsky moment, which I wrote about in my book. And it doesn't take much at the margin when everybody just starts to get a little bit more aware of the risks, and the next thing you know, the lenders are demanding more collateral, and they're being a little tougher on the qualifications for the loans, and the thing kind of cascades through the system. And that's the normal cycle. That's not anything different from what we've been through in the 1990s or the 1980s. The difference is we just haven't been through one in Canada for such a long time that everybody's forgotten.
We'll have more with Hilliard MacBeth right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Hilliard MacBeth. Hilliard, Bitcoin has just been skyrocketing up something like 900% in 1 year. They talk about it hitting $10,000 a coin. This whole cybercurrency area, though, brand new to the planet, so we can't really go on historical facts. Some people feel it's like the tulip mania that hit the Netherlands back in the late 1600s, and others are saying this is a great, bright idea that has nowhere to go but up. What's your opinion on it?
Well, there's two things about the Bitcoin. There's more than two things, but the two obvious things. It's the original cryptocurrency, but now I heard the other day that there's something like 4 or 5 every day being launched. There's no barrier to entry. You and I could launch one. Maybe we should. And so that's one thing. Although Bitcoin's the original and it's the most valuable. If you could sell all the Bitcoins out there for the current prices, you'd be talking about $100-200 billion. But I kind of discount that because the problem is with any currency, with any new currency, is until the government accepts it as payment for taxes at the government. This is the fundamental origin going back thousands of years of every currency. It isn't really valid. So, and I don't see the government ever accepting cryptocurrencies for payment as taxes. But, that could change. But the other thing that is behind it is actually kind of interesting. That's what they call blockchain. And blockchain is actually quite interesting because blockchain is a technology where every single transaction is recorded. So, for instance, we've been talking a lot about housing. Wouldn't it be great if every buyer and seller of every house in Canada, and this wouldn't be that hard, were registered on a centralized registry, which would record all the transactions, and everybody could see exactly who bought and who sold and how much was the price and all that sort of stuff. So that's the promise of this new blockchain technology, which means that there's full transparency. And there are some pretty serious players that are looking into the blockchain, but I probably shouldn't talk too much more about it because I've reached the limit of my, it's such a fast-moving area, and you'd have to just sort of put everything else aside and spend all your time just trying to keep up on this one thing to know enough about it to be able to talk about it.
And Bitcoin has been defrauded a number of times.
Well, there was early on. I think that's kind of where I actually did try to read a book about blockchain by a fellow from Toronto named Don Tapscott. And Canadians are actually involved in this at the early stages. But there were two things that bothered me about this. The original founder, the name he uses, which is kind of a pseudonym, I think, is Satoshi something. Nobody knows who he is. In fact, there was a thing that came out today that said people were suggesting that Elon Musk was the founder of Tesla, was actually Satoshi, but he denied it. He said no. And so that was one thing that bothered me about it. And number two was early on there was a huge fraud where like hundreds of millions of dollars of Bitcoin just disappeared. But apparently the way Bitcoin are created, as your listeners probably know, is that you have to mine for a new Bitcoin using computing power. And there's a maximum, allegedly, of about 24 million Bitcoin that could possibly be produced under a mathematical formula. And they're up to 16 or 17 or 18 million, so it takes increasing amounts of computer power to find Bitcoin. Now that they're so valuable, there's going to be even more people working on it. But apparently it's affecting the electrical power grid because so many people are. It takes very, very powerful computers to work on this, and expensive computers as well, and they draw a lot of electrical power. So it seems crazy, and of course, until the banking system and the government accept it, it really doesn't have any value other than as a speculative currency, and it's quite possible it will never be accepted by the governments. And in the Depression, because the governments were so worried about people selling dollars in the U.S. and holding gold, the government of the United States made it illegal to hold gold, and everybody had to turn in their gold that they had at home by law at the official rate of, I think it was $35 an ounce. And that was the official rate of gold for many, many decades. And so, the government is not beyond stepping in and throwing a huge wet blanket or a bunch of cold water onto something like this. And if they feel it's threatening the financial system, they will do that.
Well, China has severely cracked down on cybercurrency exchanges.
I saw a thing yesterday about China. They said that it was quite interesting. Their bank loans are growing at some exponential rate. I forget the amount, but it's just mind-boggling how fast the bank loans are growing. But their deposits are not growing. And the problem with that is that every bank loan creates a deposit. So if there's $1 billion or $1 billion, renminbi in new bank loans, there should be $1 billion renminbi in new deposits. But it's not working that way. And of course, that's because there's a leak and the money's coming to Vancouver to buy houses. So the Chinese government is very concerned about leaks, and with the amount of new indebtedness in China, they may have to crack down in quite a draconian manner, which would really send shockwaves all around the world. And of course, Canada is right in the front. Canada and Australia would be the two countries that would be right on the front lines of being affected if China did crack down.
Hilliard, thank you so much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. You're listening to HowStreet.com radio. Find us on Twitter @HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.